Hello friends. My name is Hani Munjal. I'm a chartered accountant. I specializes in indirect tax, specifically GST, customs, FTA, state policies. So that's little background of mine. And the current topic, which is detention, seizure, release of goods, and conveyance in transit. Just to give you that, just to give you a little insight to this topic, this is a very important topic because in the GST law, we have seen quite a number of issues with respect to detention of goods or conveyance by the GST officers because there are multiple instances wherein officers have found out that there are transportation of goods being executed by taxpayers. However, these goods are not accompanying the mandatory documents which are required under the GST law for any transportation of goods. What do you mean by mandatory documents? What are the provisions for that? When I can make a transportation? These all questions we will deep dive in this webinar. For next 1 hour, we will understand what are the law which says for transportation from location A to location B, what are the documentation as a taxpayer I'm mandated under the GST law to carry these. In case if I have not carried these document, what happens to that? What are the penalties which a GST officer can levy? Or what are the circumstances under which I can still safeguard on my penalties? What are the case laws? Because this is a very important topic and this is the most practical one. I think being a GST professional, I think everybody has seen that in any transportation, there are cases wherein the GST officer has intercepted the conveyance, they have sought for the documentation, and in case we are not able to provide them, they have detained, they have seized the goods, they have asked for penalties, and they have found out various mistakes. And there are various judgments on this context. So this is a very important, very interesting one, I can say. It is applicable to everybody being any professional. If you are dealing in goods or either you are a service provider also, still you need to understand the nitty gritties of this topic. So let me just take you to on this webinar, which is detention seizure, and understand the provisions with respect to this. Now, what is the coverage of this topic? First, we will be understanding about section 129. This is the most important section wherein all provisions with respect to detention seizure have been codified. If you want to understand about this section or this topic, you have to first understand the basic provisions of this section, how the sections provide for a penalty, what are the documentation, what are the documents which a GST officer is mandated to issue, whether it's show cause notice or order, what is the timeline. All these basic provisions, all these coverage is being codified under section 129. Along with that, one rule 138, which provides for e-way bill. We have to understand this 138. Then, in case you are not able to pay the penalty, can the GST officer sell your goods? Whether he has an option, what is the law aligning for that? What is the provisions which mandate him to do that? How can he recover that amount? What would be the disposable rate? How is the priority? All these questions will be answered by Rule 154. And then various circulars have been issued to understand, wherein it elaborates you what are the documentation in terms of MUV 01 or 2 or show cause notice, which is what is the timeline under which we have to reply that. All these points, if it's a e-way bill, let's take an example. Now, from in this detention, the basic documentation under the GST law for transportation of goods from location A to B. I'll give this location A as Delhi. Let's say a manufacturer of goods want to transport, he has sold the goods, he's sitting in Delhi, he has a warehouse in Delhi, a manufacturing unit, I can say, and he has a customer who is stationed in Mumbai. Now, he would like to transport these goods from his manufacturing location to the recipient location, which is in Mumbai. Now, for doing this, there are various documentation which a manufacturer or any taxpayer is mandated to do that. First, he should have a tax invoice if it's a supply. If you are supplying your goods, if you are selling, if you are leasing, so section 7, which is a supply, it covers various aspects. If your transaction falls under the definition of supply and you are mandated to issue a tax invoice, then the principal document, which is a tax invoice, should be accompanying your transportation of goods. Whether only tax invoice can be there? No. There could be a bill of supply. Imagine, same manufacturer is supplying exempted goods. Then what is the documentation? Because there's no GST implication on exempted good. Let's say some agri product he is selling. In such a case, there is no GST implication. However, he is required to issue a document which is called a bill of supply for exempted. In case he is transporting any goods which are exempted, then it is mandated under the law that he should accompany these goods along with bill of supply. Third document, which is very important, delivery challan. So under rule 55, there are various conditions which says if you are not, there is no supply. Let's say, keeping an example, when there is a principal who is transporting his goods for a job work purpose to a job worker, whether he is required to issue a tax invoice, answer is no. He can issue a delivery challan. For that transaction, the transportation of goods or the goods should accompany this delivery challan. Along with that, so first we have understood, okay, what are the principal documents which is required under the law which should accompany your transportation of goods for your goods. Along with that, rule 138 provides that there should be a e-way bill. Now, e-way bill is a separate portal altogether. For in that portal, we should file a e-way bill which provides all the detail of your invoice, the invoice number, your goods, your description, HSN, rate, GST amount, everything you have to give a details on e-way bill portal. Along with that, there is a part B of that, EWB 01, part A and part B. Part B requires you to fill the details of the transporter ID, the detail of the vehicle. Both these documents are mandated under the law to be carried along your goods. I will just take you to the next slide. Now, section 129. Why I was explaining this first concept was with respect to 129. Now, we have understood for any transportation of goods, we should have either tax invoice, delivery challan, e-way bill. If it's an import, then there should be a bill of entry. Anything which substantiate that the duty or the GST has been paid, indeed paid. If it's applicable, in case of exempted, there should be a bill of supply, which gives the detail of the goods, the classification of goods. Along with that, there should be a e-way bill, which should provide a clear details of transportation from location A to location B. In my example, from Delhi to Mumbai, the e-way bill should provide a complete address, pin code, all the details of transportation. If you are executing any transportation of goods for your sale, for your supply, these both documents are the primary documents. It is mandated under the law that for any transportation of goods, if you are not carrying these documents, there will be a violation. Now let's understand section 129. The name of this section is Detention Seizure, Release of Goods and Conveyance in Transit. If goods are transported or stored in transit in violation of the GST law or rules, they along with the conveyance used are subject to detention. So this section very clearly says that if you are transporting any goods which is in violation of GST law, which is the violation? If either of the documents, let's say tax invoice is not there along with your consignment, or e-way bill is not there. E-way bill is there, but it is expired, or you have not extended that. The part B, which is very important to be filled, is not filled there. All these violation under the GST law attracts section 129. So the section is very clear. If you are transporting any goods or stored in transit which is in violation of the GST law, goods along with the conveyance are subject to detention. Now, okay, my goods are detained by the GST officer. The law provides that it merits. Now it is applicable for penalty. Penalty also, the section provides under two clauses. Clause A, which is the first one, and clause B. Now, first we understood that there are documents which required to be there. Then during the interception by the GST officer, he found out that the invoice is not there or the e-way bill is not there. E-way bill is there, but it is now expired. In such a scenario, he can levy a penalty under 129 A or B. Now, what is A? First, when a owner, what is a owner? We will deep dive on this word owner, because there is a specific circular which defines what is a owner. For now onwards, for this slide, we will understand the consigner who has sold these goods from, my example, Delhi to Mumbai. So the manufacturer who is sitting in Delhi is the owner of goods. If he comes forward and he accepts his mistake and he is ready to make the payment of penalty, the law provides that penalty equivalent to 200% of the tax payable on the goods can be levied as a penalty. Almost 200%. So it's a very important topic to understand. In case if you have not complied any of the documents, the GST officer can levy a penalty about 200%. Let's give an example for that. I'm just taking more of that same example. A manufacturer sitting in Delhi has sold goods to Mumbai. The value of the goods was 2 lakh rupees and it is taxable at the rate of 18%. So my GST amount was 36,000, which probably I have not made a e-way bill, assumingly in my example. So as per this provision, a GST officer can levy a penalty of almost 72,000, 200% of the tax payable. If first, if the owner comes forward for making the payment of penalty. So this is a very important condition. Sir, whether if the owner does not come forward, we will see in clause B. Now, clause A says 200% of the tax payable. Second one, if it's a supply of exempted goods, therein also you have not complied with the law. Whether it will be chargeable to penalty? Answer is yes. Penalty equivalent to 2% of the value of goods or 25,000, whichever is lower. So he can maximum levy 25,000 for a goods. In case it's a lesser than 2%, then 2% would be applicable. So taking example, if he has supplied agri products on which GSTs are not applicable, or let's say milk products on which GST is not there. However, there is no bill of supply. In such a case, a GST officer can levy a penalty of equivalent to 2% of the value of goods or 25,000, whichever is lower. So this is clause A, when an owner comes forward for making the payment of penalty. Now, clause B. Now the GST law says, in case owner does not come forward, it means the transaction is shady. There could be some other instance. So a higher penalty have been imposed, which is equivalent to 50% of the value of goods or 200% of the tax payable. whichever is higher. Let me understand from the same example. In my example, a manufacturer sitting in Delhi has supplied the goods to a recipient in Mumbai. The value of goods was 2 lakh rupees. As per this first point, the maximum penalty, the penalty he can impose is 50% of the value of goods as CGST penalty. Because remember, we are reading only CGST law. There's an equivalent in SGST. So if it's a IGST, it'll be 100%. So 50% means he can levy penalty as CGST 1 lakh rupees, SGST 1 lakh rupees. So total 2 lakh rupees, which is equivalent to value of the goods, he can levy, or 200% of the tax payable. In my example, it was 72,000 because 2 lakh was a value of goods, 18% was leviable. So 36,000 into 200%, which is 72,000. So he can levy up to 2 lakh rupees as a penalty because whichever is higher. So it's a very important provision to understand. If there is some violation, the owner should come forward. If he doesn't come forward, the penalty would get increased up. And in case of exempted also, similarly, in the A clause it was 2%, in B clause it was 5% of the value of goods, or 25,000, whichever is lower. So maximum 25,000 for exempted, but they have increased to 5%. So this is 129. This is just subsection 1. We are reading further on this. Now 129 provides that now your goods are detained. There is a penalty applicable. For penalty, it's had to be paid by cash only. That is a principal point. It cannot be paid through ITC. I don't think so anybody would have a ITC of penalty. So it will be always a cash. In such a case, the section provides that for releasing of the goods, the owner can provide a bond or a bank guarantee so that he can get the goods released. He can either make a cash payment or he can give a bond and a bank guarantee to say that I'll be paying the penalty for getting the release of the goods. Next point, which is a very important point, no detention without order. Goods and cannot be detained without serving a formal detention and seizure order. So 129 very clearly says that if an officer has detained the goods, it's mandated for him to issue an order, which should be a speaking order, which means there should be reasons for that. Unless without an order, the seizure is not valid under the law. Just to give you a little background on this, I know I'll be discussing about various judgment. One of such judgment talks about this. It's the facts are there have been a seizure being done by the officer. However, he has not issued the order. In such a scenario, the taxpayer has approached the High Court by way of a writ, and the High Court has ordered them to release the goods because he has not, as a GST officer, he has not complied with the provisions of 129. Now, it can be very safely to say that the 129 does not only provide a guidance for the taxpayer, but also provide a responsibility to the GST officer, wherein he is also mandated to issue a order, a formal notice, a show cause notice, and an order. So both are having their own responsibilities. Further, there's a specific circular which caters that in case of a bank guarantee, it can be given as a bank guarantee. It specified various points with respect to bank guarantee. So the government has given a clarification for that as well. But in such a case, the taxpayer has two options, one being a cash payment and other being a bank guarantee. He can give a bank guarantee. Now I'll take it forward. So we were in the earlier slide, we were discussing about order. Now 129 provides a timeline for issuance of notice. Further, there's an order. 129 provides that if there is a detention of goods, a, a GST officer is mandated to issue a show cause notice within 7 days. within 7 days, he had to issue a show cause notice to the taxpayer, wherein he should provide a reasons for that. In form MUV 07, it's easy to learn. MUV 07 within 7 days. Further, he should provide the opportunity of being heard. For, I'll repeat once again, 129 provides that within 7 days of the detention, an officer is mandated to issue a order, which is MUV 07. And any order should follow only when there's opportunity of being heard has been given to the taxpayer. Then only within 7 days of the notice, he can issue an order in MUV 09. So 7 days for issuance of show cause notice, and then 7 days for issuance of order. And in between, he has to give an opportunity of being heard. So this forms are also there in the section as well as in the rule MUV 07, MUV 09. Here I'll take one more point. There are circular 3 and 41, 41 specifically. So this circular provides a elaborative provisions with respect to forms. What is the timeline? I'll give you a little more insights to that. So once there is a interception by a GST officer of any conveyance, he is required to record the statement of that owner, which will be MUV 01. Then he is required to do a search of the, or I can say he is required to take care of the goods. He will understand what are the goods, what is the documentation. For that, he will issue MUV 02. So there are various documents which are prescribed under the circular, which a GST officer is mandated to do. In case he does not follow all these procedures, there are various judgments or various case laws wherein high courts have taken cognizance of these procedural aspect and they have remanded back or they have quashed the order also. So we have to be very mindful as a professional to understand whether the GST officer has actually complied with all these documentation or not. So it is very important to understand the provisions of these circulars. Let me give you one more example. I'll be taking one of the judgment in my end of the webinar, in the last slides of the webinar, wherein this point, opportunity of being heard, was also questioned. So as a little fact to that, there is one of a case wherein an officer has issued order. However, he has not given an opportunity of being heard to the taxpayer. This issue, a taxpayer has been taken up to the High Court. High Court, after taking cognizance of all the facts, has remanded back to state that kindly provide the opportunity of being heard to the taxpayer, and then only you should pass an order. Now I'll take some example. Let's say in one of our judgment also this has been questioned. So I have already told you there are two documents which is very important: tax invoice, which is bill of supply, delivery challan, along with e-way bill. Now in one of our issue, one of our case law, the transporter details, which is the truck number or the conveyance number, was incorrectly being entered. Let's say in one of a e-way bill, the actual conveyance number was HR155232. That was the actual conveyance number. However, the accountant or whosoever was filling e-way bill has inadvertently filled UP15, the same number. Now, being a GST officer, he has questioned it, saying that there is a mistake in e-way bill. I would levy a penalty of 129. Then, for this issue, there's a specific circular, which we will deal in the next slides. So we have to be very mindful what is the allegation being raised by the officer before replying. So we have dealt out with opportunity of being heard. Now, 139 also provides that in case you feel that the taxpayer feels that the penalty being imposed by the GST officer is correct and he would like to pay off that, then in same circumstances, if the taxpayer makes the penalty for the payment, all the proceedings relating to that would be concluded in terms of Rule 142. So there will not be any, once he make the payment, his goods would be released either by way of a cash, or he can give a bank guarantee or a bond and bank guarantee. Basis thereto, a GST officer is required to release the goods of the taxpayer. And they are later on, probably if he is not okay with the order or he want to litigate, he can always approach 107 appeal, or he can go to writ petition. Basis the discussion for sure. Now I'll take to next slides. Now in the last slide, we have understood that he has the option to make the payment in case he doesn't make the payment. So we have understood the tax officer has 7 days to issue a show cause notice in MUV 07, and after that, after 7 days, he can issue a order in MUV 09. Generally, the law provides that a taxpayer is required to make the payment within 15 days for releasing the goods. In case he doesn't make a payment, the GST officer has a, a right to recover these goods by sale of goods. He can recover the penalty, he can recover the penalty by sale of goods. So there is a clear law which is being provided that how a GST officer can sell these goods and then recover the amount, and what is the way in which he can adjust the proceeds of the sale of goods. First being, he can auction these goods by issuance of DRC 10. And then in case payment is not made, he can, if payment is made, he can release the goods. But before there is an auction, DRC 11, he can, once he has organized the auction, he will take DRC 11 for the bidder to pay 50, to pay the amount of the goods, and then he will pass on the ownership rights, because now these goods doesn't not belong to the taxpayer. These goods will belong to the department or to the government, and they will indeed pass on, they will sell these goods, they will recover the money, and they will pass on the ownership right by issuance of DRC 12. So once you have received the order, you should be very mindful to either pay that amount or submit a BG, so that at least you can release the goods. In case you have not released the goods, the GST officer has the option to sell these goods. Further, there's one more notification which provides that in case these goods are in the nature of perishable or hazardous. Now this, what is perishable, hazardous, is all provided under the notification. What are the goods being covered under the perishable and hazardous goods? So they are very clearly provided that what type of goods would be covered under this. Now, if your goods are covered under perishable and hazardous goods within the notification, he has the option, the GST officer has an option, he can give you a lesser time, which is with less than 15 days for making the payment. He can give you 7 days. And if you have not make the payment, he has the option to sell these goods by way of auction of goods, and then he can choose the bidder who is paying the more, and then he can transfer it. So you have to be very mindful. Once your goods have been detained by the officer, you should reply very proactively, because it's a very small timeline being provided under the law. 7 days for issuance of show cause notice, and after 7 days there is an order, and then within 15 days you have to make the payment. So further, let's assuming you have made the payment, or you have not made the payment, you have submitted a BG and a bond. Now you would like to litigate, you would like to file an appeal against the order. So as a normal procedure, you have an option to file an appeal against the order before Commissioner Appeal under section 107. And in case it doesn't gives you a favorable order, you can file appeal against the order of Commissioner Appeal with GSTAT under 1112. Now, just to give you recently, earlier, so in 2022, Finance Act 2022 provides that in case of any penalty being imposed under Section 129, there was a pre-deposit which has been provided at the rate of 25%. So Finance Act 2022 provides that in case you have an order which has a penalty under Section 129, the law provides that you have to deposit a pre-deposit of 25%. And 107 provides one more pre-deposit. Let's say, taking example, you have an order which has a demand of tax, interest, penalty. Now the law provides that in respect of that, the pre-deposit of 10% is with respect to tax only. For tax only, you are mandated to deposit a pre-deposit of 10%. Till now, sorry, but recently, Finance Act 2025 has amended this provision. And with respect to any penalty, why I'm saying any penalty, I'll explain you in 5 minutes. But for 129, they have reduced the pre-deposit from 25% to 10%. That was a change, which is a very welcome change from Finance Act 2025. But there's one more change. So earlier I have told you that uh, till now, till Finance Act 2025 gets the assent from president, it's still a bill. So it's still not an act. Till now, as of today, in 107, we have only two pre-deposit. One is a demand wherein there is a tax interest penalty, and one there is a demand of 129. In first scenario, there is a 10%, and then in the second scenario, which is 129, which we are seeing, is 25%. So there is one more issue. In case there is an order wherein it is only with respect to penalty. Giving example, let's say there are various orders now being issued by DGGI wherein they are imposing a personal penalty, only penalty on the directors. Sorry, under section 137 or 122. In such a scenario, even though the quantum is very high, the law does not provide any pre-deposit, which is still now. But by way of Finance Act 2025, it has been mandated that any penalty order, if you want to file an appeal, there's a requirement now to pay 10% pre-deposit. Sorry. So, which is a very recent amendment. And to give you more perspective, there's a very recent judgment by Bombay High Court in the case of Mesrec India. So there's a demand being raised by DGGI on Mesrec India, which amounts to rupees 31 crore. So some 3,700 crore has been raised. As a part of same demand, similar penalty have been imposed on the tax manager, on the employees of Mesrec India. Now, this demand only pertains to penalty. So till now, there is no pre-deposit if a taxpayer wishes to go against that order. But once this Finance Act 2025 is become a law, all those order which has only penalty still will require a pre-deposit of 10%. So we have to be very mindful of this new amendment. Now, we have discussed that in case you don't make the payment, you do not make any payment of the goods, the tax officer has a right to dispose of your goods. Under Rule 54, whatsoever money, let's say he has auctioned it, there's a higher bidder who has bidded for your products, for your goods, he got it. Now he has recovered the money. As a tax officer, there's a priority order being given under the law. First, whatever money he has received, let's say he has received 1 lakh rupees. First, he will adjust that 1 lakh rupees from the administrative cost. What do you mean by administrative cost? Let's say he has done a bidding process. For that bidding process, he would have given a tender or he has taken a space on rent. or he has given some other advertisement cost, whatsoever administrative cost he has done, because that is directly relatable to your auction, he will adjust that amount first. Then the main important point, which is your dues and penalties under 129. Even then adjust whatever penalty is being applicable on your goods, which you have not discharged, he will adjust that amount with your recovery of your goods or your sale proceeds. If any amount is still lying, then he will adjust the amount with your other defaults, assumingly if a tax officer, if a taxpayer is a regular defaulter and there are other penalties which he was liable to pay, however he has not paid it, so the government says no, you will not get the money first, he will adjust your other balance amount, and then if any money still lies it, then we will credit to your electronic cash ledger if you are registered under the law. If you are not, then we will deposit under the bank account. I don't think so personally any money would still be remaining after adjustment of administrative cost, dues, and other amount from the defaulter under the GST law. So even the law provides it, practically I don't think so money would be remaining after this. But the law says yes, they will credit back to your electronic credit ledger, cash ledger, or bank account. Now this is a very important point. We were discussing in our previous slide that in case, first the law provides that within 15 days of the order you have to make the payment, but this 15 days can be reduced by a GST officer when your goods are classifiable or mentioned in notification number 27. So there are 17 categories of the goods which require immediate disposable after seizure if these are in the nature of perishable or hazardous. Then he can give you a lesser time and he can dispose of these goods. What are these perishable goods? Let's say you are dealing in salt, menthol, camphor, saffron, or these are hazardous goods like petroleum products, lighter fuel, dangerous drugs, or these are fast depreciating newspaper, which is one day back. A newspaper today would not be usable tomorrow, or rechargeable batteries, or some abundant goods. Restricted prohibited goods, fireworks, you are dealing in fireworks, which is restricted, or red sandalwood. All these goods, if you are dealing under these all goods, in case you don't make the payment of penalty, the tax officer has an option to not give you 15 days time for making the penalty after the order. He can directly within 7 days, or probably he has a lesser timeline sorry, to dispose of these goods. So be mindful of if you have received any order with respect to payment of penalty under section 129. Till now we have understood that there are penalty, there are important documents, there is a 129, everything we have understood. However, so there are some relief being given by sorry, just give me a minute. Sorry for that. So there is a relief being given by the CBIC by way of a circular. Let's say what condition or what scenario is being covered by this circular. It provides that if you are transporting any goods, there is a invoice, there is a tax invoice, however there is no e-way bill, then still that scenario would be covered under 129, which is 200% penalty, or in case the owner does not come forward, he will be liable for 50% of the value of goods. But in case you are carrying invoice and e-way bill, but there are some small mistakes in the e-way bill. What are these mistakes? We will dwell more. There are 6 scenarios which provide that there are small mistakes, and the benefit of getting covered under this would be that as a normal 129 penalty, which is 200%, penalty equivalent to just 500 CGST and 500 SGST would be applicable. So it's a very big relief if you are carrying a invoice and a e-way bill, because this is a normal genuine mistake. There is no intention of CBIC to give unnatural favors to you. But being a human, there could be various small mistakes which should not be seen as a bigger issues. There is no malified intention, because any penalty is to be imposed when there is a malified intention to evade tax. In these six situations, there is no malified intention, but there are human errors. So CBIC or a government has given you a leeway to say that, okay, we will not impose a humongous penalties of 129. We will give you a lenient view and we will impose only 1000 rupees as a penalty. What are these situations? First, there's a minor spelling mistake in consigner or consignee name. Giving an example, let's say in my same example, a Delhi supplier was selling goods to Mumbai. The consignee name was Sham. However, while entering in the e-way bill, the spelling was incorrectly written as SHAM. Actual name was SHYAM as Sham, but while typing, inadvertently he has missed one letter. But the GST number was correct. For this small mistake, a penalty of 200% would be very much. So the circular says the penalty only of 1000 rupees can be levied. That's the first scenario. Second one, error in PIN code. Let's say you have typed. So just to tell you, e-way bill, once you are mandated to provide PIN codes from location A to location B. Let's say example, you are transporting goods from Gurgaon to Rajasthan, which could be a one off place, let's say Jaipur. You are transporting your goods from Gurgaon to Jaipur. So you are mandated to provide a PIN code of Gurgaon. And if it's being shipped to Rajasthan in Jaipur, then what is the correct PIN code? But while typing in e-way bill, the the person sitting there has made some small mistake, but the address was correct and it does not affect the e-way bill validity. So basis generally on the basis of PIN code, the e-way bill computes the validity, whether it can be 6 days or 5 days. But in this issue, in this scenario, the PIN code was incorrect, but the address was correct and the validity was also correct. If that is a scenario, then the penalty would be only 1000 rupees. Next point, error in consignee address. So there is some error in the consignee's address, but locality and other details are correct. So while typing, the person has made some small mistakes, but it cannot be seen as a malified intention to levy a 129 penalty. Now, error in one or two digits of documentation. Let's give an example. The tax invoice number was 123456, but in e-way bill, mistakenly the person has typed 123, but every other details are correct. In that scenario also you are covered. HSN code. If there is a mistake in HSN code, but your first two digits are correct and the GST rate is also correct, it means there is no revenue loss because of yours. In such a scenario, the penalty would be lesser. So just to say that, just to give you a very simple approach, penalty is being levied when there is a malified intention, when you are trying to evade from the tax. And this circular actually gives you a leeway for lesser penalties when there is a human error, when there are small errors, like say there is two digits character of vehicle number missed, which I have earlier give example. In place of HR 155232, you have mistakenly written UP 15. There is no revenue loss in this. You have paid GST correctly. There is a correct e-way bill. The e-way bill is valid. In such a scenario, this circular 64 gives you at least a easy answer to say that, okay, there is a mistake, but there is no revenue loss. Hence, such humongous penalties of 129 should not be levied on me. And just be mindful, because all these mistakes which I am here discussing looks to be very easy. But when the tax officer sees that, he will always try to say that, okay, there is a mistake, you are liable for 129 penalty, please pay that, which is 200%. So being a tax professional, we have to readily read this circular, which is 64 by 38, so that, and keep it handy in case you face a similar issue, you are there to provide this circular to the tax officer, because he will not give you benefit. You have to read it, you have to tell him that, okay, I accept there is a mistake in my pin code, but my address is correct, my e-bill validity is also correct, I am being covered under this 6 scenarios which is being provided under 64. So kindly don't levy me 200%. Maximum you can levy a penalty of 1000 rupees. So this is very important to be. So this is a very important relief given by CBIC. Next point. So this is, I think, from 129. We have read that the clause A and clause B, which is if a owner comes forward, then there'll be a lesser penalty, which is 200%. Ideally, I should not say lesser, but yeah, comparison to clause B, which is 50% of the value. But what is the meaning of owner? By way of circular number 76, the government has given a clarity to say that if you are having an invoice or e-bill, either of consignor or consignee would be deemed to a owner. Let's say you are transporting goods from Delhi to Bangalore, and Delhi guy, which is the supplier in Delhi, has already sold these goods to a person or recipient in Bangalore. Now this is a FOR. The risk and reward has already been passed on to the recipient in Bangalore. The consignee who is sitting in Bangalore would be deemed to a owner, because now he has the ownership of these guides. So either of the both, whosoever is coming forward to pay the penalty and release these goods would be deemed to be the owner. In case there is no documentation, let's say there is no tax invoice, there is no e-bill, then the proper officer will determine that and declare the owner of the goods. Now it's a responsibility of the proper officer to understand who is the owner of the goods. So it's a very important circular to say that, okay, I'm a consignor, I can be deemed to be owner, and I come forward for making the payment for clause A or clause B, whatever you want to cover. If you come forward for the payment, it'll be covered under clause A, which is 200% penalty. And be mindful of the earlier circular. If you have made, if there is a tax invoice, there is a e-bill, but there are some small mistakes in that e-bill. So next, very important, various case laws with respect to e-bill and 129. In one of a case, in one of a issue, in case of Varun Beverages versus State of UP, Allahabad High Court has seen that there was a e-bill, there was a tax invoice. However, in e-bill, there was a small human error, which I have given you example. I was taking an example from this judgment only. That in this judgment, the facts are, in place there was a tax invoice, there was a e-bill, but in e-bill, the person has incorrectly provided the vehicle number a mistake, which is in place of HR 153252, he has written UP 153252. Now the tax officer has said it's a mistake. I will not give you a benefit of the circular because you have not asked to me. I will levy a penalty of 129, which is 200%. But the court said there is a human error. You are covered by the circular, and this is a minor discrepancy in the description of vehicle in the e-bill, and should not attract penalty under 129, which is a very big penalty. So Allahabad High Court, in the case of Varun Beverages, has given this benefit to the taxpayer, which is Varun Beverages. Now, other judgment, which is in the case of Ram Prakash Chauhan versus Commissioner of Delhi. Delhi High Court have seen that neither the show cause notice or the demand provides a reason as we were discussing, whenever a show cause notice or an order has been issued by a tax officer, there should be a clear answer. There should be a clear reasons why he is imposing a penalty on a taxpayer. Unless he has not provided any clear reasons, it is not a valid order. There should be a speaking order which says there should be a clear reason for imposing a penalty. What are the mistakes being done by the taxpayer? And if you're not able to prove that, the Delhi High Court in the case of Ram Prakash Chauhan has remanded back to the GST officer and decide afresh basis the giving him full opportunity. Give him opportunity of, if you are first make out the reasons why you are imposing a penalty, and then also the High Court have said give him a opportunity of being heard so that he can provide his address, he can provide his reasons. Let's say in upper Varun beverages, let's say in Ram Prakash also, I'm assuming only, the factual are not same like this. I'm assuming in Ram Prakash also there is a mistake in e-way bill. At least a personal opportunity of being heard is given, then he can substantiate saying that I'm covered in this circular and I'm not liable for 129 penalty. So this judgment very clearly says you should have a reason and give it, at least give an opportunity of being heard to the taxpayer. Next judgment, which is a very important one, Rajasthan High Court in the case of Shrimali Industries Private Limited versus State of Rajasthan. The facts of this case are the taxpayer was transporting some old scrap of aluminium. The GST officer has intercepted the vehicle, and once on during that interception he has found out that these was not scrap, these are not aluminium scrap, but these are brand new aluminium, and the GST rate applicable on these new aluminium are much higher what was declared by the taxpayer. So there is a misdeclaration by the taxpayer. However, the assessee has filed a writ petition. The court, after understanding the issue and also going through the order which provides a reason, has understood that there is a misdeclaration by the taxpayer and they have not quashed the show cause notice. They have said the writ petition is non-maintainable and they have made the show cause notice as it is. So in case there's a mistake, there's a misdeclaration by the taxpayer, in such a scenario you are liable for a penalty and you cannot evade that, because penalty is when there's a intention to evade a tax. If you have done that, for sure there will be a liability. However, in case there is a genuine mistake, there is a human error, high courts also give a leeway. Also the circular also provide a leeway for that. So we have to be very mindful whether there is a misdeclaration or there is a human error while dealing with any such issues. Next, Calcutta High Court in the case of Abhinash Kumar Singh versus State of Bengal. In this, there was no e-way bill. The taxpayer was not carrying any valid e-way bill. The e-way bill was expired and then he was transporting these goods. The High Court, after going through the facts of the case, have said that transportation goods with a proper e-way bill is one of the salient features of the Act. There is no scope to dilute the said provisions of law because law is very clear. You should have a tax invoice or delivery challan or whatever documents along with a valid e-way bill. So High Court has very categorically said the taxpayer, the petitioner is certainly at fault in transporting goods without a valid e-way bill. There is no relief granted. So there are judgments. The High Court have given a leeway, have given a beneficial when there is a correct circumstances for that. In case there is an intention to evade the tax or you are not complying with the law, then the penalty is not being dropped by the High Courts. So we have to be very mindful of all these documentation. We have to be very clear that our documentation are correct so that we don't end up into any penalty stage. Next, and the last one, Madras High Court in the case of Deepran Roadways versus Deputy State Tax Officer held that orders of detention and demand of penalty were not sustainable because they were not passed within 7 days of issuance of notice. In previous slide, I have very categorically said on the GST officer, there's a timeline. Within 7 days, he had to issue a show cause notice, and after that, he had to issue a order within 7 days. So there is a very clear cut timeline being provided under the law, which both the taxpayer, also the GST officer is required to comply with. In case the GST officer has not complied with these timeline, the the high courts have quashed the order and they have indeed directed to release the goods and conveyance. So there are judgments which are favorable to assessees when there are merits for that. There are clear-cut answers. Also, there are judgments wherein the high courts have said if you are not complying with the law, we cannot give you a benefit of doubt. So kindly comply, both the taxpayer and the GST officer. And as a professional, a tax professional, we have to be very mindful of the GST law so that we all can implement that very clearly. Thank you. Thank you. That is my presentation. I think I have taken uh, I have been given 1 hour and I have tried to finish my webinar. I'll take questions. So there are questions. What is the timeline to issue tax invoice by Delhi? Is bill to ship to scenario when bill to. So first question is what is the timeline to issue tax invoice? So there is a very clear place of POT rules which provides what is the timeline. If it's a service within 30 days, if it's a goods on the supply of goods, in case of bill to ship to scenario when bill to party. So if it's a bill to ship to scenario, for sure there'll be a tax invoice which is being issued by the supplier, and he will issue a e-way bill for such transportation. There's one question which says you have a proper e-way bill, there's a proper tax invoice. However, the officer has said that there should be a e-invoice. Now, in e-invoice, under the law, there's a threshold which is 5 crore. If your turnover is below 5 crore, you are not mandated to issue an invoice. The tax officer is incorrect. If your turnover is above 5 crore, yes, you should have a invoice. Then in such a scenario, the officer is correct because invoice means tax invoice or e-invoice when your threshold is crossed. So he's correct. I'm not sure whether your threshold is meeting a 5 crore or not. Please check up that and then probably you can answer accordingly. I think these are the two questions. There is no other question. Thank you. Thank you all.